Your thoughts on the session?
James, look, we ended up closing in pretty positive territory despite starting off this morning a little bit concerning. Of course, the market really was being anchored and weighed down by BHP as a result of that significant fall we saw over in the UK. We did see some higher leads coming through from offshore markets, but this morning we did start in negative territory. Around midday, however, we really were able to turn around and sort of continued some increases from there, closing up about 0.2% in the end. We are continuing to see some strong earnings coming through, which again is really pushing our market higher. We saw NRW Holdings a strong performer, the likes of Wesfarmers, Woodside, Fortescue all reporting pretty well. The best performer today being that staples sector, up 1.8%, as I said, being led higher by Wesfarmers, but it was actually dragged lower by Coca-Cola. Telecommunications was another strong performer, as well as healthcare. But really the underperformer today was that materials sector, down about 2%, and it really was for most of the day, and of course that was being dragged lower by BHP, which closed down close to 4%. Volumes were a little bit better today. We saw close to $5 billion going through, although we did see, of course, Suncorp going ex-dividend and some of the other larger stocks, and of course that always results in some higher volumes going through. But overall, a pretty optimistic day.
Through Leanne. Let's kick off with Woodside. I think in the end up about 0.7%, 1.1 billion dollar headline number. What did you make of it?
Look, it certainly looked like a strong result. Of course, it was a record result that came through looking at some of those numbers, although it was fairly in line with some forecasts. But having a look at some of those highlights, of course, those net profits up 27%, that strong cash flow up about 158% to $1.8 billion, and gearing at about 4%. That was actually below our forecast of about 7%. That interim dividend up about 34%, and again, that was marginally higher than what we were expecting. And of course, looking at the outlook, they're expecting their 2014 production target to now be increased to that 89 to 94 million barrels of oil equivalent. So certainly very optimistic in terms of the outlook there as well. I think one of the negatives, however, out of all of this was in fact that we didn't really receive much of an update in terms of their capital management, and I think there probably is still a little bit of concern out there in the market and from investors in terms of where their growth is in fact going to come from, whether it's going to be acquisitions, buyback, or potential special dividends as well. So I think we know that they are under a bit of pressure to find some growth. We're expecting that some of their production will start to fall off from around 2015 onwards, so we do need to start hearing out more from the company. We probably think that they may look to hold on to some of their cash, potentially to unlock that Shell overhang, maybe at a later date, and we may potentially see a small special dividend coming through in the interim. But we'll have to wait and see. I think that was probably one of the concerns, but overall certainly a very strong result today.
It's on Wesfarmers today, Leanne?
Look, it certainly did look pretty positive, particularly in terms of that capital management, as you've been talking about, and that resources area, which came through better than expected. I do certainly think there were some negatives, however, despite seeing that share price really rallying. That target earnings were lower, but as we know, this was mostly to be expected. Industrials and safety earnings were also lower, and of course we saw some fairly weak operating profits coming through. But overall, looking at the FY14 result, it did demonstrate a strong focus on that capital discipline through that high dividend payout ratio, and of course that capital return. They're expecting to see some further growth coming through from Coles, Bunnings, Officeworks and Kmart as well, but as we know, Target really is the one that's going to continue to come under pressure. So I think looking at the outlook, we do remain a little bit neutral and probably a bit cautious. We're probably concerned about the high PE ratio that it's trading on at the moment, with potentially very little growth coming through. We're only forecasting about 1% growth in earnings per share coming into FY15. That's actually about 6% below consensus. So probably a little bit of concern there in terms of the growth outlook, but certainly some of those numbers look pretty strong today.